Hello and welcome to this HM Revenue and Customs webinar, VAT Accounting Schemes, the Basics. If you run a small business, accounting for VAT could be a big part of its operation. So it might help to know about the different VAT accounting schemes available, as choosing a suitable one could save you time and effort. There are quite a few schemes, some of which you can use in combination, but during this presentation we'll be having a look at the three most popular VAT accounting schemes: the Annual Accounting Scheme, the Cash Accounting Scheme, and the Flat Rate Scheme. I'll start the presentation with a reminder of how standard VAT accounting works. If you use standard VAT accounting, you'll pay VAT on any invoices you've issued, even if you haven't received the payment from your customer. And you'll reclaim VAT on any invoices you've received, even if you haven't yet paid your supplier. VAT is charged at the appropriate rate when a VAT-registered business sells to either another business or to a non-business customer. This is called output tax. When VAT-registered businesses buy goods or services, they can generally reclaim the VAT they've paid, and this is called input tax. There are three rates of VAT depending on the goods or services the business provides. These are standard, reduced, and zero. If you've charged your customers more VAT than you've been paid, then you pay the difference to HMRC. But if you've paid more VAT than you've charged, then you can reclaim the difference from HMRC. You must give details of your total sales and purchases, together with how much VAT you owe or are entitled to reclaim on a VAT return, which has to be sent to HMRC every 3 months. We're going to start our overview of VAT accounting schemes by looking at the Cash Accounting Scheme, which is our most popular scheme, currently used by around 250,000 businesses. As I've just mentioned, using standard VAT accounting, you'll pay VAT on any invoices you've issued, even if you haven't received the payment from your customer, and you'll reclaim VAT on any invoices you've received, even if you haven't yet paid your supplier. Using the Cash Accounting Scheme, you pay VAT on your sales when your customers pay you, and you reclaim VAT on your purchases when you've paid your suppliers. You can use the scheme if your business is registered for VAT, and if your estimated VAT taxable turnover during the next year is not more than £1.35 million. You can continue to use the scheme until your turnover goes above £1.6 million. Although some of the accounting schemes can be used together, you can't actually use cash accounting if you use the flat rate scheme, which we'll be looking at shortly. Cash accounting can be beneficial for your cash flow, especially if your customers are slow to pay. It's even more useful if you have bad debts. Under standard accounting for VAT, you have to pay the VAT on an unpaid invoice, even if you never receive payment from your customer. But using the cash accounting scheme, you don't pay the VAT if your customer never pays you. But the cash accounting scheme may not be for you. For example, if you regularly reclaim more VAT than you pay, or if you buy a lot of goods and services on credit. If you're eligible to join the scheme, the good news is that you don't need to complete an application form or tell HMRC when you start using the Cash Accounting Scheme. Just make a note in your VAT account. If you're already VAT registered, you can start using the Cash Accounting Scheme at the beginning of any VAT period. If not, then you can use it from the day your VAT registration starts. If you decide that the scheme is no longer for you, or you're no longer eligible to use it, then you don't need to tell us. You should leave the scheme at the end of a VAT accounting period, and you must pay any outstanding VAT, whether your customers have paid you or not. You can ask for an extra 6 months to pay this, though. HMRC can ask you to leave the scheme if you're misusing it, or if your turnover goes over £1.6 million. Now let's meet Colin, who's a commercial photographer. Colin finds that using the cash accounting scheme fits in with the way he runs his business because it lets him account for VAT, output tax, on the basis of the payments he receives rather than the invoices he issues. He offers his customers credit terms, up to 30 days to pay their bills. So under this scheme, he doesn't have to pay the VAT on his sales until his customers pay him. And of course, this helps his cash flow. Colin isn't happy about customers that don't pay, and he always takes steps to recover any monies owed. But because he uses the cash accounting scheme, he knows that if he never receives money he's owed, then he won't have to pay VAT to HMRC on these sales. Colin registered for VAT when he set up the business, and he was pleased to find that he could use the scheme straight away. If Colin had joined the cash accounting scheme after he'd registered for VAT, he would have started using the scheme from the start of the next VAT period. You have to be up to date with your VAT returns and payments if you want to join the scheme after you've registered for VAT. Using cash accounting doesn't mean Colin just keeps a record of his cash position. He has to keep a record of all types of payment, for example, cheque or credit card. His records need to show when he gets paid and also when he pays his bills. He'll need to keep a record of his creditors and debtors, those who owe him money and those he owes money to. There may be times when Colin isn't sure of the date of the payment. In these situations, we have rules to guide him. For example, if he's paid by direct debit, the payment date is the date his bank account is credited with the payment. Information on how to pay your VAT bill, as well as further information on the cash accounting scheme, can be found on the gov.uk website. Now, let's have a look at the flat rate scheme. Using standard VAT accounting, the amount you pay or claim back from HMRC is the difference between the VAT you charge your customers and the VAT you pay on your purchases. Using the flat rate scheme, you pay VAT as a fixed percentage of your VAT inclusive turnover. The actual percentage you use will depend on your type of business. However, you'll continue to charge your customers VAT at standard, reduced or zero rate. There are a wide range of businesses included in the scheme, and you'll need to choose the business description that best describes your main business for the coming year. You can use the scheme if your business is registered for VAT, and if your estimated VAT taxable turnover during the next year is less than £150,000. As I mentioned before, you can't use the flat rate scheme if you use cash accounting. Almost 250,000 businesses already use this simpler method of working out the VAT due to HMRC. So, is the flat rate scheme for you? Well, it offers the following benefits. If you use the scheme, then you won't need to record the VAT you charge on every sale or purchase, which means you'll spend less time on your record keeping and more time running your business. But you'll still need to show VAT separately on your invoices, just as you do for normal VAT accounting. If you're in your first year of VAT registration, then you'll get a 1% reduction in your flat rate percentage. There are also fewer rules to follow, and there's more certainty too. If you use the scheme, you'll no longer have to work out what VAT you can and can't claim, and you'll always know what percentage of your takings you'll have to pay to HMRC. But the flat rate scheme might not be for you if you regularly receive a VAT repayment under standard VAT. Also, you can't claim VAT on your business purchases except when they're on one invoice of over £2,000. The scheme might not be right for you also if you make a lot of zero-rated or exempt sales, or if you buy a lot of standard-rated items. Now let's meet Nita, an IT consultant. Nita had been VAT registered for just over a year, but she wasn't aware of the flat rate scheme until she came across a short video giving an overview of VAT accounting schemes on the HMRC YouTube channel. So she visited the gov.uk website to find out more information about the scheme, and she decided that it was right for her. Nita checked the list of VAT flat rates on the website to find the one for her line of business. She wished that she'd known about the scheme when she first registered for VAT so that she could have taken advantage of the first year 1% reduction. You can see that the flat rate applicable to computer and IT consultancy is 14.5%. Although Nita only has to pay a percentage of her turnover, she still needs to show VAT at the appropriate normal rate, standard, reduced or zero, on the invoices she issues to her customers. So let's go through Nita's calculation for her last VAT period to work out how much she needs to pay HMRC. At the end of her VAT period, Nita adds up the total of all her supplies including the VAT. The total is £10,000. As we've just seen, the flat rate she'll use is 14.5%. So Nita multiplies £10,000 by 14.5%. And this gives her an amount of £1,450 to pay to HMRC for this period. The flat rate calculation should be kept with her VAT account. Nita likes the scheme because there are fewer rules to follow. She doesn't have to work out what VAT she can and can't reclaim. And she has certainty because she always knows what percentage of her takings she'll have to pay to HMRC. The last of the VAT accounting schemes we're going to look at is the annual accounting scheme. So, what are the differences between standard VAT accounting and the annual accounting scheme? Well, when you use standard VAT accounting, you have to complete 4 VAT returns each year. Any VAT due is payable quarterly, and any VAT repayments due to you are also repayable quarterly. But using annual VAT accounting, you'll make 9 monthly interim payments, or 3 quarterly interim payments through the year. And you'll only complete 1 return at the end of the year, when you either make a balancing payment or receive a balancing refund. The scheme may therefore not be suitable if you regularly reclaim VAT, because you'll only get 1 VAT repayment per year and you'll have to wait until the end of the year to get it. Annual accounting can both reduce your paperwork and make it easier to manage your cash flow. You can use the scheme if your business is registered for VAT, and if your estimated VAT taxable turnover during the 12 months is not more than £1.35 million. You can continue to use the scheme until your turnover goes above £1.6 million. The annual accounting scheme can be used together with the cash accounting scheme or the flat rate scheme. You can join the scheme online when you register for VAT, or by post by completing form VAT 600. Now let me introduce you to Adam. Adam's a tree surgeon. His busiest time is during the autumn and winter months, and he was finding it difficult to fit in completing his VAT return when he was working flat out during this peak period. So Adam had a word with his accountant about his difficulty in finding time to complete his VAT return, and she suggested he applied to use the annual accounting scheme. The scheme would allow Adam time to complete a VAT return when he's less busy, and of course he can spread his VAT payments across the year. To join the annual accounting scheme, Adam used our VAT online service and filled out the appropriate form. We notified him when his application was accepted, and we also sent him a schedule telling him when and how much we'd be taking from his bank account. Adam makes 9 fixed advance payments and a balancing payment at the end of the year. This really smooths his cash flow, and it stops the uneven quarterly payments he faced before. VAT must be paid to HMRC electronically. Adam decides he'll make his payments by direct debit, which will ease the pressure on him. He could also make additional payments as and when he can afford them. For example, if he wins a large unexpected contract which increases his VAT liability for the year. Adam linked his VAT year with his quietest trading time, but you might prefer to make it the end of your financial year. However, no change would be allowed that created a period longer than 1 year, because no VAT period may ever be more than 12 months. Now he completes just 1 return per year. He gets 2 months to complete his return and pay his bill instead of standard VAT accounting's 1 month. Let's now take a look at how Adam will work out his advance instalments. If you've been registered for VAT for less than 12 months, your advance payments will be based on an estimate of the VAT you expect to pay for the coming year. If you've been registered for VAT for more than 12 months, your advance payments will be based on last year's actual VAT payments. You'll usually pay 9 instalments of 10% of your last year's annual VAT liability. Last year, Adam's VAT bill was £10,000. 10% of £10,000 is £1,000, so Adam will need to pay 9 advance payments of £1,000. He'll make a final payment, known as a balancing payment, when he sends in his VAT return. This amount will be the difference between his advance payments and the actual VAT bill confirmed on his VAT return. Adam will complete his annual VAT return online in the usual way. The total amount for the year will automatically be entered as he works through the boxes on screen. The online system doesn't take into account any of the advance payments already made by Adam, so he'll need to work out the balancing payment separately. Adam likes this scheme because it spreads his payments more evenly across the year. He also likes the certainty of fixed payments, but he also knows that he can pay additional amounts if he needs to. During today's webinar, we've looked at 3 of the most popular VAT accounting schemes which can be used on their own, or in some cases together, to save you time and money when accounting for VAT. If you need further help, then you can sign up to receive regular emails from HMRC. The emails highlight the help and support we provide for small businesses. We also have an online e-learning package for newly self-employed customers, which includes practical case studies. You can work through the package at home and at your own pace. Gov.uk is the best place for government services and information. Visit the website for plain and simple help and guidance. You'll find lots of bite-sized tax information videos on our YouTube channel. If you need reassurance, quick help, or are just interested in finding out more about a subject, then this might be the best option for you. And of course, you can follow us on Twitter to receive official news and information. So that brings us to the end of this presentation. What are you going to do now? For example, perhaps you'd like to visit gov.uk to find out more about VAT accounting schemes. Here are some more ideas to get you started. You can find further information on each of the schemes covered in this presentation by clicking on the links below this video.